Hey guys, in this video we're going to talk about how to invest in yourself and use your personal capital to create cash flow. I'm Barry Page with Legacy Money, the show that shares the truth about money. If you haven't already, go ahead and hit the subscribe button so you're notified when I come out with new videos. Let's get started. The best investment you can ever make is in yourself. Whether you have a business or it's just for your family, your ability to create wealth is an asset that must be thoughtfully considered. Watching this video, you'll actually be excited about investing in yourself. These are simple practices that you can learn to create significant returns. If you want to learn how to invest in yourself, you may have to put aside some generally accepted norms. And if you're a business owner, you understand that this can be difficult. The term economic value added, or EVA, is a trademark term of Stewart, Sneed and Company. EVA is used to measure financial performance. It's calculated by measuring the cost of capital from after-tax operating profits. EVA became popular in the United States in the 80s when major corporations started using it to increase their profits. They discovered that their capital had a cost. Once a person discovers that their capital has a cost, it changes the perspective, and cash flow management becomes an essential skill in creating profits and wealth. Now, if you're like me and most of the people I work with, you don't like to lose money. Yet people continue to invest their hard-earned money in risky investments like the stock market. Businesses are risky, or can be risky too, but typically they have reporting and accounting, and they have ownership so they can make adjustments as needed. Our personal finances work similar to a business, so accounting for profits and expenses will be relative to our discussion. Okay, let's talk about what I call the 3 E's of investing. That's education, experience, and efficiency. In talking about education, I'm talking about financial education that is specific to your goals. When we talk about experience, this could be your personal experience, or it could be the experience of others. This will save you time and money. And thirdly, efficiency. Efficiencies can decrease cost, which calls lost opportunity cost, and it can also increase profits. In business, the goal is to make a profit. With our personal finances, people generally think in terms of increasing their net worth. Unfortunately, most people have already given up on the idea of becoming wealthy or rich. But regardless of where you are in life financially, you're spending money. How we spend our money will make all the difference. Furthermore, when we spend our personal capital on an expense, that money is gone forever. It will never be able to work for us or our family ever again in the future. The term lost opportunity cost, LOC, refers to what that money could have done had it been invested instead. So if the goal is to create profits and increase our wealth, how can we do that without taking on additional risk? We should have a financial plan that is efficient and protects us from loss. Investing can mean different things to different people. And the idea of investing in oneself can seem odd because most people do not recognize their true economic value. In simple terms, we're going to earn a lot of money over our lifetime. The goal should be to keep more of that money. A favorite author of mine, Jim Rohn, said, "Profits are better than wages." So I'm going to encourage you for a minute to think like a business, to think in terms of profits. Businesses invest in inventory, research and development, and key employees to increase their profits. They continuously reinvest in the business with revenue generated from sales to be competitive in the marketplace and increase their profits. Think about all it takes to start and run a business. Businesses have to secure a location, hire and train employees, and purchase inventory, secure credit lines if they need, and all of this is in an effort to earn a profit for the business. They continually reinvest into the business to improve and be competitive. So if we think in those same terms in our personal lives, we need to reinvest in ourselves. We need to continuously try to improve our efficiencies and cash flow management. Investing in our financial education and increasing efficiency with our spending can increase our wealth. Life has a way of being unpredictable. So the best way to protect ourselves from this risk is with proper insurance. Insurance protects us or our valuables and transfers the risk to others, in this case, an insurance company. We protect our businesses, our homes, our automobiles, and our valuables with insurance. So why don't we apply that same standard to our lives and our income? So the first way that we can protect ourselves and our income is with proper insurance. Now I know you may be thinking, well, that sounds like an expense, not an investment. Remember, you're the asset. So we're protecting your ability to earn an income and your family because you are the asset. If you're still earning an income, it should be protected, just like you protect your business or other accounts with insurance. You are the asset, so that's where we have to start, by protecting our lives and our income. Proper insurance can also protect your saving into certain account. For instance, certain types of life insurance policies offer a waiver of premium rider. What this does is continue the payment of premiums into the account in the event of your disability pursuant to the policy terms. As far as I know, life insurance is the only asset that protects you and your ability to earn an income for your family. It allows your dollars to perform multiple duties while growing your wealth over time. These policies are not generic and they're not average. They're specifically designed for the owner's intent. Perhaps the most overlooked benefit of life insurance is the ability to borrow money against the account, to collateralize the policy for a loan. This means that the policy can continue to grow even though you are using borrowed funds. Consider how you could use these funds in your business or in your personal life to increase your profits and increase your wealth. They have guaranteed loan access without credit reporting. Meaning you can't be turned down for the loan as long as you have the collateral capacity, cash value. In this scenario, the life insurance company is using the death benefit of the policy to collateralize the loan. The money can be borrowed at competitive rates, and the money that is in the policy itself can continue to grow because it's only being used as collateral. The company charges interest, and the interest goes back into the pool of capital. You can consider permanent life insurance as your own private reserve, your own banking system, a place that you can have your money compound and grow and use to finance your purchases. Here's how that works. You have money in your own private reserve account, i.e. the life insurance contract. You borrow money against that policy, that contract, and it is used for collateral. The company refers to this as cash value. Let's say you wanted to borrow money to purchase a car or for additional inventory for your business. You simply call your agent or the company, or you can even do it online nowadays and request a loan. The company will look at your account to see if your cash value is sufficient for the loan, and then they'll send you a check. Or in many cases today, you can simply have this ACH direct deposited into your bank account. This is an interest-only loan based on current rates. They tell you how much interest they're going to charge you and create a lien against your collateral capacity, your cash value in the account. The non-pledge portion of your cash value is your remaining collateral capacity. Now, if you're in your working years, you're going to want to pay this loan back. The difference is this is a non-structured loan. So you're not going to get a payment book. There's nobody going to beat down your door or repossess your purchase because you didn't repay the loan on time. You determine this. But again, it's important to pay the loan back, especially during your working years. Remember, the interest portion is still a cost. So you're going to want to pay this loan back as quickly and efficiently as possible. Nothing has happened to the life insurance contract. It's still in force, it's still in effect, and though you've borrowed money against the policy, you've only used it as collateral. The money did not come out of the policy, and the money's not going to go back into the policy. It's going to the insurance company. Your policy is used as collateral. So let's recap. Permanent life insurance, when designed and utilized properly, can provide protection, savings, growth, and access to capital for cash flow or any other reason via collateralization. We haven't discussed taxes that would be incurred on other investments. You might want to check out some of my other videos on the tax advantages of life insurance. But there are no taxes levied on the growth in the contract or the death benefit of life insurance. Investing in yourself through permanent life insurance allows you to protect your family, your assets, and your ability to earn an income if set up properly. You can use it as a private reserve to finance purchases and to create cash flow for your business or your personal life. It's a place where you can store your capital safely and create generational wealth for your family. The best investment you can ever make is in yourself. Understanding and practicing these self-investment techniques can take time, commitment, and discipline. However, once perfected and turned into habits, they can be very profitable. Thank you so much for joining me today. I hope I added some value, and I'd really appreciate it if you subscribed to my channel and gave me a thumbs up if you liked this video. Until next time, invest in yourself, and I'll see you in the next video.